Hi, I'm Steve Strazza, and I'm here with JC Parets, founder of Allstarcharts.com. Today, we're talking about microcaps, small caps, and transports. JC, these charts don't look so good. What are you seeing out there?
Well, why are we talking about small caps, transports, and microcaps? Because the charts look the same, right? They look very, very similar. And, I think we can argue that we have successfully retested those lows, right? From earlier in the summer, right? Early June, particularly in the transports and in the Russell Small-Cap 2000. However, in the microcaps, we did break down. But in all three cases, we did not get oversold in momentum, which is really evidence and consistent with higher prices for these indexes, if that's the case. So we want to make sure that moving forward, as we enter the Labor Day period, and we start getting into September and October, we want to focus on the summer lows. If we are above the summer lows in those areas, I think we need to err on higher prices.
So you're talking about the late May, early June lows, and what we just saw in all three of these indexes, whether you're looking at microcaps, which we're using the ETF IWC, the Russell 2000 for small caps, or Dow Transports, or the ETF IYT. They all just kind of retested or slightly undercut the lows from May. Like you said, momentum using the RSI 14 didn't get oversold, so they have some positive divergences there.
Yep.
And now it looks like prices are finding support and rebounding at that key level.
So this does two things. Number one, it gives us a point of reference from a risk management standpoint, right? Because what has it done? It has reiterated the importance of those levels, particularly in small caps and transports. So now we know moving forward, if we're above those levels, there's support, there's strength, or there has been until now. So if that breaks, I think that there's a lot more downside, a lot more consolidation to go in this market. It would be evidence that it is not as strong as the last couple of weeks would suggest, in my opinion. So I think that as market participants and observers and trying to find important levels in this market, I think we got it, particularly in small caps and in transports, right? Those June lows that held. Now, moving forward, what can confirm, yes, and make those levels even more important is that if the microcaps can get back above those June lows, I think that would show incredible resiliency out of the microcap space, and that's most likely happening in an environment that stocks in general are acting well and going higher.
And like you said, they all do look very similar, but the microcaps probably look the weakest structurally, no?
Yeah, totally. So that's going to be the confirmation that we're on the right side. If microcaps come back, get above their summer lows, boom, they join the transports and the Russell 2000 small caps. And notice how the mid caps are the strongest of all of them, right? We're not mentioning them specifically, right, but of all of those non-large cap groups, if you will, the mid caps are the best, which I guess makes sense, right? They're the largest, are the ones closest to the large caps, I suppose. So that makes sense, but no doubt about it. These three indexes, I think moving forward, are giving us so much information. And if we're below the August lows in all three of these indexes, Russell Small-Cap 2000, Dow Jones Transportation Index, and the Russell Microcap Index, IWC is a good ticker symbol to follow that one. If we're above the August lows, I think we need to be buying stocks very aggressively. Doesn't necessarily mean you need to buy those, but I think that's just a good sign for the market overall. That means put money to work, let's buy stocks. That's what I think.
Right, so you're kind of looking at them more as a risk barometer, not as an area of the market that you want to be invested in to make a bet on any potential upside, but more so, small caps and transports kind of led last year to the downside. If they break this level here, maybe they could lead again to the downside, but if they hold it, it's probably a constructive sign for U.S. equities more broadly.
Yeah, and just to reiterate, this is not always the case, right? It's not like this magic indicator that JC invented. It's just how the dynamics of the market are currently set up, with potential bullish momentum divergences in all three of these indexes that have been struggling and underperforming, with S&Ps and the Dow and the Nasdaq and large caps just pressing up against all-time highs again and again and again. If we start to get participation out of the smaller cap groups, to me, I have to take that, and not just small caps, but just the underperforming groups in general. Who's left to drag this market down?
Sure. So a lot of bears have pointed to the lack of confirmation in areas like small caps and transports. When you talk about them participating, do you need to see them make new all-time highs or simply hold these lows in order for your overall thesis on US equities to be a bullish one?
Yeah, I mean, listen, these things, it's not like the S&P and the Dow and the NASDAQ that are pushing up against all-time highs. These things have been pushing up against new 52-week lows, really. So there has been an underperformance. So to expect them to make new all-time highs and wait for that to happen to get involved, I don't think that makes much sense at all. In addition, we don't necessarily need them to lead either. Just participate, just stop going down. And then for those bears out there, it really is up to them to say, hey, you know what? The data has changed. We need to err on the long side. We need to be buying stocks, right? That's on them. And if you're bearish or you're neutral or whatever it is, which has been perfectly acceptable and correct in many cases, depending on how you play it, moving forward, if we start to break out in the large cap indexes to new all-time highs and we start to get rotation and participation out of those underperforming groups, that's up to the bears to say, hey, things have changed. We got to buy stocks. And if they don't and they stay frustrated, then I think they're foolish.
Sounds good. So does this look similar to the second half of 2016 to you at all, where prior to the US election, small caps and transports were not able to make new highs? They did not look good at all. They were leading to the downside. Then all of a sudden, everything ripped. They caught up and made a hard and fast move higher to new all-time highs.
Listen, Strazza, you and I haven't spoken prior to this. We're kind of just having a chat here, but yeah, totally. And full disclosure, as bullish as we were in late January and February of 2016, because I was like end of the world guy throughout 2015, and things changed dramatically in January and February. My opinion at the time was that this was going to be a counter trend rally off of those lows in early 2016, and then ultimately we were going to roll over. I was in that camp as bullish as we were throughout the first and second quarter. Our upside objectives were hit, and we were put in a similar precarious situation where, all right, is this going to roll over and my structural picture is going to be correct and we are going to go down and make new lows, and right? Or is this a consolidation within an uptrend that started at the beginning of 2016 and now we resolve higher, right? I was at the time thinking it was going to be the first one, not the second one, that we were going to fall and not go up. But then come July, and I've written about it and blogged about it a few times, I came back from Cabo San Lucas in Mexico, come back, refresh, looking at my charts, I'm like, oh my God, this is like right after 4th of July weekend, 2016. I'm like, oh my God, we need to buy everything. And you know, the data changed. And I said, whoa, not only do we not to be shorting things, we gotta be buying. Industrials were breaking out, technology stocks were breaking out. And then like you said, some of the underperforming areas started picking up. Regional banks ripped in the fourth quarter. So it was definitely a good experience for me that I can always look back to. JC, just keep an open mind, damn it. And you know, to those listening out there that maybe have a certain opinion, when the data changes, not just today in this case, but you know, throughout the rest of our investing lives, keep an open mind. Why are we going to be stubborn?
Well, I think those are some great words of wisdom to end off on, and this is definitely an interesting development that we're going to have to keep an eye on, and we'll check back in with more.
All right, Strazza, talk next week.